This is Barry Zelma on insurance. Today I'd like to speak about liability insurance as it applies to construction defect type claims and lawsuits. First, it is important to understand what insurance is. Insurance, by definition, is a contract whereby the insurer, for consideration, a premium, agrees to indemnify another against a contingent or unknown risk of loss. It is used as a method to spread losses among many people who are insured with the same company. The insurer, by its policy, promises in exchange for the premium to pay to defend and indemnify the insured in the event that a certain type of loss occurs within a specified period of time called the policy period. By spreading the risk of loss among many, each individual only pays a minuscule portion of the risk of loss insured against. Liability insurance is limited to insurance against the risk of losses that can be incurred by a person for damages done to the person or property of another by an accidental or fortuitous cause. The California Insurance Code, for example, defines liability insurance as follows. Liability insurance includes A, insurance against loss resulting from liability for injury, fatal or non-fatal, suffered by any natural person or resulting from liability for damage to property or property interests of others, but does not include workers' compensation, common carrier liability, boiler and machinery, or team and vehicle insurance. B, with respect to operations or property covered by a policy of liability insurance as defined above, insurance of medical, hospital, surgical, or funeral loss or expense of the insured or other persons injured, and in the case of an automobile liability policy, disability benefits to the insured or other persons injured, and in the event of their death, funeral and accidental death benefits to their dependents, beneficiaries, or personal representatives, irrespective of legal liability of the insured, when issued with or supplemented to the insurance defined in subdivision A. The definition goes on for several pages and simply results in the conclusion that liability insurance provides defense and indemnity to an insured who causes injury or damage to a third person accidentally. In exchange for the promise to pay the premium charged, the insurance company therefore agrees to provide the insured protection from various risks faced by an owner, developer, or builder of real property. The risks of loss taken by the insurer are usually and almost invariably listed on the policy. For each promise made by the insurer, it charges a premium. The Commercial General Liability Policy, the CGL, issued by most insurers to people in the building, ownership, and construction trades and professions, promises to protect the insured against the risk of loss as follows, quote, "We will pay those sums that the insured becomes legally obligated to pay as damages because of bodily injury or property damage to which this insurance applies. We will have the right and duty to defend the insured against any suit seeking those damages. However, we will have no duty to defend the insured against any suit seeking damages for bodily injury or property damage to which this insurance does not apply. We may, at our discretion, investigate any occurrence and settle any claim or suit that may result. This was adapted from Insurance Services Office Form CG 00011001. The policy will, as a result, provide coverage for the following: bodily injury and property damage to persons injured by the insured, medical payments regardless of fault, personal and advertising injury, a coverage that insures against the insured's risk of loss for multiple offenses like libel or slander, advertising injury, false imprisonment, etc., and contractual liability. These are the principal coverages available in a CGL policy. There are other coverages available to cover special needs of individual people, corporations, partnerships, or joint ventures. If special needs exist for a particular construction project that faces risks not contemplated by the standard CGL, it is prudent to consult with a professional and major insurance brokerage that specializes in the industry involved in the case. You can find such brokers by conferring with others who specialize in similar projects, your state department of insurance, professional risk managers, or chartered property and casualty underwriters, CPCU holders, who act as insurance consultants. When purchasing CGL insurance as a named insured, it is imperative to purchase only the insurance coverages needed. The potential insured should seek the advice and assistance of professional insurance brokers and agents with whom insurance is sought at least 3 months before the inception date of the policy needed. Regardless of whether the policy sought is a new policy or a renewal, the agents and brokers will need sufficient time to shop the available insurance market and try to find the broadest coverage for the lowest price. The person seeking insurance should not rely on the broker to simply renew the previous policy for the same price with the same insurer. Coverages available and prices vary considerably every year. Insurers will enter and leave the market for construction industry risks every year. The prudent insured will shop wisely and diligently every year and not leave the renewal of an insurance policy to chance. The prudent person seeking insurance will provide the broker with a list of coverages needed, the status of the insurer with whom the insurance broker is to shop, such as a best-rated A or better and admitted to do business in the state, or an approved surplus line insurer. The prudent person will have the agent or broker avoid, if possible, unapproved and not admitted insurers, and recognize that the surplus line market is a market of last resort. The person seeking insurance should ascertain that the broker advises the prospective insurers of, at the very least, the following: each person and entity that must be named as an insured, the location and a description of all properties under construction or to be under construction while the policy is in effect, the gross earnings of the insured for the year before the inception of the policy or for the last 3 years before the inception of the policy, the gross earnings anticipated by the insureds for the following year, the type of work done by the insured, such as a general contractor who supervises subcontractors but has no employees work on the project, or a general contractor who supervises subcontractors and uses his own carpenters, a general contractor who does only carpentry, or who only does plumbing, or who only does framing and drywall installation, or who does all three or four together. The loss history of the persons to be insured, whether the insureds require every subcontractor to indemnify the insureds and the owners, whether the insureds require all subcontractors to name the insured as an additional insured on the subcontractor's CGL, whether the insured requires only a certificate of insurance from the subcontractors, the identity of the owners of the insureds, the financial condition of the insureds different from gross earnings which is needed for calculation of premium, the number and identity of individuals or entities the named insured is required to name as an additional insured, the number of indemnity contracts signed by the insured in favor of others, whether the contracts entered into by the insured require waivers of subrogation, the value of the projects that will be worked on by the insureds during the policy period, the amount the insured is willing to pay as a deductible or take on as a self-insured retention, and the territory where the insured operates. When an additional insured endorsement is issued, the named insured is paying for the protection of the owner, general contractor, or some other person or entity that the construction contracts require to be named as an additional insured. The named insured still has control over the insurance, and the insurer owes the named insured a duty of care to properly defend and indemnify the named insured by accepting a person as an additional insured. The insurer is also promising to defend and indemnify the additional insured, subject to the terms and conditions of the additional insured endorsement and the policy, as if the additional insured was the named insured. The person seeking insurance must be aware of the existence of fraudulent insurers and fraudulent insurance brokers who sell insurance in non-existent or unfounded insurers based in offshore locations like the Turks and Caicos Islands, St. Kitts, Nevis, or a small country not noted for an insurance industry. Some will claim to represent high-quality insurers, when in fact they do not. The Department of Insurance maintains records usually available over the Internet of all licensed agents and brokers and the insurers who have appointed them as an agent. A prudent insured will never accept insurance binders from a broker unknown to the insured without first establishing he or she is actually an appointed agent of the insurer and that the insurer is licensed, sound, and rated by Best or some other rating agency with a sufficient rating to be certain that in the event of a claim, that claim will be paid and that policy will remain valid. This video was adapted from my book, Construction Defects and Insurance, Volume 4, which is the fourth part of an 8-part treatise on construction defects and insurance, and is available as both a Kindle book and as a paperback from Amazon.com. If you found this video to be of interest or use to you and your colleagues, please pass it on. It's free. And please also subscribe to my YouTube channel, my Rumble channel, my blog, and my Substack filings so that you can be advised of future videos and future blog postings. Thank you for your attention.